In this video, I'll share my analysis for the Florida housing market. If you've clicked on this video, you're likely wondering about the current state of the housing market, whether it's a good time to buy or sell, and the potential impact of economic recovery. I'll address these questions and more. We'll cover various aspects, including affordability, the ongoing Airbnb bust, interest rates, ghost inventory, and my insights into specific regional and local real estate markets. Let's dive into the details. Disclaimer: I'm not your financial guru. Reflecting on the past, the downturn from 2008 to 2012 marked a 5-year cycle, followed by a period of growth until 2023. In 2022, housing prices experienced a temporary decline attributed to an increase in interest rates. However, the market exhibited signs of stability and even witnessed a slight upturn in 2023. The future trajectory of housing affordability appears to hinge on the interplay between housing prices, interest rates, and inventory levels. As these factors continue to evolve, they will collectively shape the dynamics of the real estate market. Currently, only 23% of homes listed are affordable to the average income earner, a far cry from the balanced 50% seen in more stable markets. In the current real estate landscape, securing a home demands a household income of approximately $114,000, a figure significantly higher than the average income of $59,000, as reported by Forbes. This glaring $55,000 disparity has left many perplexed, pondering how individuals are navigating the challenge of affording or residing in these exorbitantly priced homes. The revelation is that a considerable number are resorting to leveraging debt as a strategy, a trend that raises concerns and adds a layer of unease to the housing market dynamics. Ghost inventory, distinct from shadow inventory, pertains to an excess of speculative homes constructed within the past 3 years. Builders encounter hurdles due to escalating costs and are compelled to introduce this surplus into a market already contending with affordability challenges. The imminent influx of costly new constructions, frequently not captured in current data reflecting an accumulating inventory, poses a significant risk of reshaping market dynamics profoundly. The Airbnb industry, once a gold rush, is experiencing a downturn. Investors who secured interest-only loans face challenges as equity drops, liquidity dries up, and refinance plans crumble. Small investors with multiple properties find themselves unable to sell due to being upside down on debt. Increased costs catch rookie investors off guard, and the true extent of delinquent loans remains masked due to regulatory complexities. Interest rates, the most speculative aspect, play a pivotal role. The average 30-year mortgage hit a 22-year high, exacerbating the affordability crisis and adding uncertainty, especially in an election year. Anticipation is building regarding a noteworthy shift in diverse real estate markets, with indications pointing towards a reset to values reminiscent of those observed in 2020. This expectation is grounded in the recognition that the growth witnessed from 2015 to 2020 was distinguished by stability, establishing a robust foundation for the market. In contrast, the past 2 years have seen a swift and uneven expansion, marked by unprecedented occurrences. The ensuing concerns about this volatile and imbalanced growth present a compelling argument for a potential market reset to 2020 values, factoring in adjustments for inflation. In select regional Florida real estate markets, including Okeechobee, Pinellas Park, and Avon Park, the inventory is continuing to grow. Many are counting on the return of snowbirds to alleviate the inventory, assuming they'll make cash purchases. However, I want to challenge that assumption. Cash buyers may not be who we think, and this year, the snowbirds might not be here to buy. The current real estate climate, with unfavorable rates and insurance costs, has impacted our historically affordable region in Southwest Florida. While we have attractive waterfront properties, they aren't the majority of our sales. Now, as snowbirds return, they're facing increased property tax bills, potentially doubling if it's not their primary residence, and rising insurance costs. The whole vibe of our area has changed, becoming more crowded and dangerous on the roads due to an influx of people with different driving styles. Traditionally, Snowbirds sought a laid-back experience during their winter months, but now even simple tasks like going to the store have become challenging due to increased congestion and traffic. The carrying costs have changed, and even cash buyers, especially those who retired years ago, may find it more expensive now, despite their accumulated equity. Moreover, the looming issue is the potential surge in listings after the first of the year. Currently, we already have a 6-month inventory in Charlotte County, and price reductions are becoming common within weeks of listing. It's crucial to price properties right, considering the rapidly changing market dynamics. Adding to the complexity is the insurance crisis in Florida. Many are opting to self-insure due to rising costs, leaving a significant portion of the population vulnerable in the event of a storm. The next storm could have severe consequences for those who choose not to carry insurance. Transitioning to new developments, we're witnessing a surge in new construction, including houses and apartments. The auction of Signature Bank's apartment loan portfolio is indicative of potential challenges in the multifamily industry, suggesting a decline in property values. I also want to touch on the evolving narrative within the real estate industry. The date the rate, marry the house concept is fading, and there's a noticeable shift in the attitude of real estate agents. A recent manifesto circulating among agents emphasizes the challenges of the job, but it's crucial to maintain a balanced perspective. The changing narrative, especially regarding high prices, raises questions about the industry's dynamics and agent motivations. Lastly, the claim that cash doesn't matter is gaining traction, contrary to historical trends where cash buyers held significant advantages. The market sentiment seems to be shifting, and financing is now considered just as good. This shift in perspective is noteworthy and may impact how deals are structured in the future. In conclusion, the housing market stands at a critical juncture. Acknowledging the challenges and understanding the intricate connections between affordability, inventory, and interest rates will empower you to navigate these turbulent waters successfully. The real estate landscape in Florida is undergoing significant changes. It's essential to stay vigilant, adapt to market shifts, and be mindful of the evolving dynamics to navigate successfully. If you'd like to continue exploring this world of finance, consider subscribing and inviting your friends to join the conversation. We're here to provide insights and knowledge. And hey, if you're curious about this $1.5 trillion debt-fueled tsunami crashing into our commercial real estate shores, Warren Buffett himself is sounding the alarm. Check out this eye-opening video by clicking on the link if you want to know more. It's like a warning bell ringing in the distance.